How do Bitcoin futures work? It's actually pretty simple, but it can get very complex. For example, if Bitcoin forks, how do we trade each side of the fork? This has pretty big implications for the future of Bitcoin, and I've got CTO of Bitnomial, Matt Wraith, on the pod today. We get into this and many other esoteric Bitcoin topics. Bitcoin Season 2, let's kick it off. Welcome back to Bitcoin Season 2. I have Matt Wraith, CTO of Bitnomial, a digital asset futures exchange. Welcome to the show, Matt.
Thank you. Good to be here.
Yeah. I will get into bit, I want to have a conversation about like futures, kind of ground up, explain to the audience what futures are. And then I have the ambitious aspirant goal of talking about what a Bitcoin fork futures market would look like. But let's roll back the clock because Bitnomial's been around a while. Yeah. I see on the website, it says 2014 founded, and it says, quote, Bitnomial was founded to solve market dynamics and access problems, which is kind of ambiguous. And then I see that you guys rolled out your first like actual Bitcoin or digital asset futures in 2020. That's 6 years.
Yes.
What?
What was going on in those 6 years? Yeah. So back in 2014, 2015, we kind of started working on the technology, building the base layer for making an exchange, regulated in the US by the Commodity Futures Trading Commission. That's kind of like the SEC's cousin for commodities. We were like, okay, Bitcoin's a commodity. We got to do commodity futures on this thing. Like CME, all the big other exchanges that existed. It was like back in 2014, 2015, Bitcoin was not on their radar at all, and we saw this as a huge opportunity. It's like, okay, clearly this is going to be a very important part of America's financial future. And, we want to be a part of that. And that I think there's new and interesting infrastructure that you got to build in order to, it justifies making a new exchange that's able to do kind of what is like an industry buzzword, physical delivery, which just means like the big differentiator with our futures is that you actually get the Bitcoin at the end of the contract. But maybe I'm getting ahead of myself.
Explain when we get into futures, like what that means.
Yeah. So that was 10 years ago. And those 6 years were basically us submitting an application to the CFTC and building all the technology, and like going back and forth with lawyers and, building a team that can actually operate an exchange and run it. We've been doing that since 2020. And since then, we've also launched our own clearinghouse, which is the whole thing. And, we've got all kinds of things going on.
So like while you guys are going through this process of applying lawyers, back-end tech stuff, all the things that you need to build a futures platform, America and the world changed a lot. Regulations changed a lot. Let's cut to today. We have a new, you don't have to comment. I know you got to be careful, but we got new people in Washington, and there's very much a vibe shift in like the discourse around how to treat digital assets. Like, does that feel like in the past 6 months, your business has do you have more blue ocean, or has nothing changed really? Or was this telegraphable? Like, I'm curious, what does it look like today versus maybe a year ago, thinking about building a futures exchange?
Yeah. That's a great question. And so when we started working on this, that was in the Obama administration, it's changed a lot. Like we eventually launched under the Trump administration part one. And, I feel like it's like lots of things have changed, but also a lot of it has stayed the same. It's like the CFTC, the laws are still there. They're like, the laws haven't really changed, but there's maybe a familiarity with Bitcoin, and that it's like, oh, okay, this is a thing that's legitimate. It's not crazy. And yeah, I mean, there's definitely a vibe shift for sure in the last like 6 months, I feel like.
What does CTO at a futures exchange actually do? Like,
yeah,
what is your job?
Well, I guess mostly I'm making sure that the technology that needs to get built is built and is running well. A lot of it's working on building a strong engineering culture. Like, we use Haskell, which is kind of a weird language, and there's a lot of stuff there. But, I help a lot with the design and architecture of the technology. And then there's a whole like regulatory and compliance part of this, right? There's like IT general controls and all this stuff that, are a part of being a regulated business and making sure that like we're doing what we say we do.
You have like a lot of, security, backend infrastructure stuff you got to do. And it's interesting because, this conversation is going to be maybe more about markets and, but like, how do you find yourself kind of having to, as pretty much anyone in Bitcoin has to do, you kind of have to wear multiple hats and have multiple dimensions of expertise. So do you find you're spending a lot of, as much of your time on like
email marketing?
Well, maybe not marketing. No.
Yeah.
No, like, like the structure of markets as your role of technology focused.
Yeah. I mean, I would say that like, at least at Bitnomial, I'm involved in a lot of those conversations, but I feel like we have people who are experts in like how to structure markets. And I'm more like, how do we make that happen? If that makes sense. Of course I'm like a part of the conversation because the technology and the like what's possible and what you want to do are like, they're deeply intertwined. Right.
Yeah.
So there's a lot of the like, what should we be doing? What are we doing? How do we do it? Yeah. And I'm kind of straddling all of those.
Yeah. So let's get into futures.
Yes.
Disclaimer, don't really spend much time thinking about futures. And I don't know if I possess like the basic language and building blocks. Feel free to correct me like when I use a terminology wrong or when I frame a question wrong or whatever. But like, okay, so imagining I'm a CoinDesk listener and I've stumbled upon this podcast and I don't know the first thing about, markets at all. What is a future?
That's a great question. So what I would say is first of all, they're a legal contract that is a tradable in some sense between people. So what does the legal contract say? It's just like buying and selling some good, except instead of buying and selling the good today, you're buying or selling that good at some specified time in the contract in the future. And we're going to agree upon the price today, but then we're going to delay the delivery of the dollars and the thing until that time to make it like really concrete. It's we do physically deliver Bitcoin futures, which means, okay, so like, let's say we're going to agree upon, I'm going to sell you a Bitcoin for $120,000, I don't know, for December. And you buy it. We don't do anything now. We've just made the agreement. And then when December rolls around, I forget who said buyers, but if I bought it from you, I'm going to give you $120,000 and you're going to give me a Bitcoin.
Regardless of what the trading price of Bitcoin is.
Totally regardless of what the actual price of Bitcoin is come December or whatever happened in the meantime, Yeah, that's exactly right.
And maybe, I heard you.
One critical thing is that you can trade this thing. So we made this agreement, but then, if there was, I could then sell this like delivery of Bitcoin in the future to somebody else, and then they're going to get the Bitcoin instead.
So I think you had a really good kind of way of explaining this with Aaron and Casey on our sister podcast, or maybe our rival podcast, Hell Money Podcast.
Yeah.
On like the history of commodities futures. And that might be like a good place to start because I've heard some interesting people some interesting takes on how commodities started with like maybe corn or orange juice or something. But yeah, like what have people used futures for historically, and maybe bring us to today?
Yeah. So futures are used for all kinds of things. I would say like primarily where it all started is agriculture. It's like, okay, I'm, some big agricultural producer like McDonald's or something. And, I need wheat and beef to go into my hamburgers. I need lettuce or whatever. You have all these different inputs, and how much you need like over the course of the year. And you're very worried about the price of those things going way up or way down, right? So it's like you're trying to sell a hamburger for $5 or whatever, and then all of a sudden the price of wheat goes up 10x because there's a drought or something. You can end up in a situation where you're now selling your $5 hamburgers at a loss. And so you can think of futures as insurance on the price of Bitcoin or whatever the thing you're buying is. Yeah, exactly. And so it all kind of started in commodities like a couple hundred years ago is when it got really big. This stuff has been around for like a long time, like some form of like financializing commodities. But like in America, it really got huge in like the late 1800s with the Chicago Mercantile Exchange, and there's a couple of other places. It's primarily in Chicago was kind of where, and Chicago today is the like hub of all this stuff.
Yeah, well, I feel like you've got to start in Chicago if you're going to trade, if you do commodity stuff. Cause I mean, my real where the rubber hit the road for me on like futures was my family's in oil and gas, and 2020 came around. Oil went negative.
Yes, that's
and
right.
I remember this because like you had a trading price paper in Chicago, like at the CME or something, and then you had at the Port of Houston like ships coming up and they need to drop it off. Yeah. Well, I remember everybody in the family started getting calls, like try to find like places to put the oil. And
people are paying you. If the price of the future is negative, they're paying you to take it off their hands.
Because it's physical delivery. So, okay.
Yeah.
What's physical? What's physical delivery versus like, I don't know, what do you call it? Paper, synthetic delivery?
Yeah, or cash settled. Financially settled is maybe another way that some people say. So physical delivery is, as I said before, it's you're actually getting the thing, right? So with oil futures, it's like, okay, I bought a barrel of oil for March 2020 or whatever it was, right? And then you as the person who is selling the future, you need to actually send the oil somewhere. And then where and how, what quality is all specified in the contract. And then you taking delivery or buy it when you bought the future, you actually have to go and pick it up and take it somewhere, and that's what we do with our Bitcoin futures, so, and it's kind of the simple thing that I described. It's like you make an agreement, you trade one of these Bitcoin futures, and then come time of the expiry of the contract, you have to send Bitcoin to an address if you sold it. And then if you bought it, you have to kind of give an address and receive those Bitcoin.
So, this is interesting because, again, I'm not a student of commodities markets, but I have heard some people say like Bitcoin and it might not be totally unique, but it does. It is a little differentiated from like most commodities, because oil.
Yes.
This is the reason why I went negative, is because you have to put it somewhere.
Totally.
Bitcoin has no like storage cost. Like, what is this? How does this change like the physical delivery of your futures contracts? And like, is there any historical analog or precedent to this?
Yeah, it's something that's kind of interesting is there are lots of different ways that futures can be delivered, right? So, for example, there's the way that oil gets delivered for like, CME's futures. It's like all of the oil gets delivered to one place in Oklahoma. And then
Cushing or Henry Hub, somewhere.
Exactly. Yeah. I mean, you probably know more than I do with the family, but
yeah, it's one thing that I know a little bit about. Yeah.
So all the oil goes there, and then it gets kind of dished out of the pot to whoever is taking delivery, and that works well because like oil is so liquid and it can kind of be merged together, and you don't really care like exactly which one, or anything like that. But for like gold futures, for example, typically it's like the gold is living in a vault somewhere, right? And you don't actually like move the gold when you take delivery of the gold futures. It's more like it just updates your account, or you get like a receipt that theoretically you could go and get the oil or get the gold out of the vault, but like nobody does, like the gold stays in the vault and you're just getting like a receipt on it. And then there's like maybe other kinds of agricultural products where it's like it might even be fully peer-to-peer. Like there's no central delivery point. It's just like, oh, you have to actually move the thing from your place to whoever you sold it to. So there's lots of different models. Our model is actually mostly like the oil model, where it's like, oh, you deliver into what we call the settlement facility. And then the Bitcoin gets dished out of that pot. Yeah. But you could imagine a Bitcoin warehouse or something like this, where the Bitcoin goes into the vault and you're like trading.
Is that what a clearinghouse is when I see this? Or how does that like distinguish? This might be too big of a question because I'm getting into the weeds of how different things, how the nuts and bolts work.
There's all these different delivery models. And usually it's like for CME, it's like they're experts in running markets. They're not experts in corn logistics, right? So it's like a totally offloaded thing from their perspective. But for Bitnomial, it's like, what skills do you need to be good at to run an exchange? Technology, infrastructure, operations. What skills do you need to be able to move Bitcoin around? Technology, infrastructure. It's kind of unusual that the exchange is actually involved in delivery like ours is, but we are. And it's because it's like kind of plays to our skill set. And that is like a unique thing to Bitcoin, I would say.
Okay, that's really interesting. That's actually really helpful. I've heard people say different, like when I hear people, like I've heard some interviews with like other exchange founders, and they're like, it's kind of interesting because we're not just making a market. We like have to do 5 different businesses all at the same time. And I mean, respect as a guy who's worked in Bitcoin for a long time, like, running a normal business is just very different than doing anything in Bitcoin.
Totally.
So I think I have a kind of a high level view of futures, like physically delivered futures. How has the Bitcoin, perhaps broader digital asset market futures evolved?
Did we want to talk about cash settled futures? I mean, that is something we could talk about. Sorry.
Give me what's cash settled future?
Okay. A cash settled future is, it's very similar to the physically delivered future, except instead of actually getting the thing, we're basically going to just use some number that's like a magic number outside of our system, an oracle, if you will. Like that's kind of like the blockchain-y way of talking about it. But in the financial world, people say an index, right? There's like a number that is the thing that we're going to benchmark to, right? And so when December rolls around, we have some index, which is like an average of all the spot market prices or whatever. And we're going to use that. And then we'll just settle up the difference in cash, basically. Like whatever the magic number says. If it was, say we did like $120,000 for December. If it was $125,000, I might owe you $5,000. If it's $115,000, you might owe me $5,000 or something like that.
And so does the person have to keep like that, cash on hand? I'm actually curious, like what does like this part of the due diligence process to make sure like collateral exists so that the counterparty will pay up or something?
Yeah. So when people are trading these things, they have to put down margin, which is like basically collateral, if you will. You can think of it like that. And, when the price of the future goes up or down, they might have to respond to a margin call and, kind of pony up more. And there's a rate at which you have to maintain to like keep the position. And usually if it's far away from expiry, it's some, small percentage of the contract. But as you go towards delivery, it gets higher and higher until like, okay, now you have to actually deliver the thing. And here's like the thing.
Because like the closer you get to an event, the higher confidence you have about it. So the more expensive it is to
exactly
hold that position. What has the Bitcoin broader digital asset futures market looked like over the years? And I guess, what does it look like now? Well, first of all, when did we start to see like the first futures for Bitcoin or other digital assets emerge?
Yeah. So, there have been futures outside of the US that have been kind of going on. And like, there's like Bitfinex has had futures, BitMEX, like all these things. And they have had these like, but they're kind of off in the unregulated.
They're not regulated in the US. Yeah.
But they have had, futures markets, and people can go and trade those things. Not Americans.
Not Americans, yeah.
But there are people who can trade these things. And, the idea that you might need price insurance for Bitcoin, I think is a natural one. Like historically, the price of Bitcoin has been quite volatile, and if you're trying to run a business in the Bitcoin world, you're very exposed to the price of Bitcoin. I mean, like generally speaking, the history has been that like number go up and people like, and that's like a good thing for those businesses, I guess. Yeah. But it could very easily go down, right? And or the other way around, like you want to sell Bitcoin for some reason. You're a miner or something like this.
Yeah, but miners are like a great model to imagine.
Yeah, there's exactly. And you're very worried about the price going down. You know, and then there's the other side where it's like people who are buying Bitcoin for whatever reason. They're very worried about the price going way up. But yeah, I mean, so this has been going on for a long time offshore. It probably was around 2020 or so when we launched, and there's a handful of other exchanges who have launched Bitcoin products. So CME has a cash settled Bitcoin future. And there's a handful of other exchanges in the US now that have futures, but we're kind of the ones that have the thing that's like actually useful, right? Like a physically delivered future with margin, and there's this whole business of like over collateralizing futures sometimes, but that's a whole other thing. It's not quite as useful. It's like, oh, okay, you have to put up the full amount of the contract, maybe even more than the full amount, and maintain that over the duration of the contract. And it's like, okay, that's not that helpful. It's so capital inefficient that, you might as well not, whereas our thing is kind of the natural expected thing that has been useful in other commodities markets for a long time.
Hey, Will here at Blockspace Media. Did you know that we have individual feeds for all our shows? If you're watching the Mining Pod, Bitcoin Season 2, or the Court Show, be sure to check out the individual feeds. You can find them on your podcast player of choice, whether that be Spotify, Apple, YouTube, etc. Just type in Blockspace Media and you'll find all our shows pop up, or just type in the individual show name like the Mining Pod or Bitcoin Season 2. Be sure to hit that subscribe and give us a 5-star rating so we can continue to bring you the best content in Bitcoin.
So I think this is enough like foundational discussion to get to the kind of point of what I wanted to chat with you on, which is Bitcoin has gone through a very famous hard fork back in 2017, the block size debate into the Bitcoin Cash Bitcoin hard fork. We have we regularly soft fork, haven't for a while. We talk about it in this podcast a lot, but when there's a chain split, you have two tokens. And I believe this is kind of novel in commodities.
Yeah.
I don't know what I don't know about how you design futures around this. And this is, as far as I've done research, we don't have much, like a whole lot of we have like a couple historical examples. So Matt.
Totally.
How do you want to tackle this, explaining this topic of Bitcoin fork futures?
Sure. So there's a good history of this. Like with, I think the fork futures kind of first started happening with SegWit, and there was some forks that were kind of like almost going to happen before like we got the actual SegWit split. But there was like the whole Bitcoin Unlimited thing. There was SegWit 2X. There were all these different proposals out there while we were kind of figuring out what would actually happen with SegWit. And so, people wanted to speculate on what the price of these things would be relative to each other, kind of conditional upon it actually happening. Right. So you can imagine a contract, a legal contract, if you will, that says is very, very similar to a futures contract, except it's if there's a chain split, or at some date, given that a chain split has happened, what I'm going to do is I'm going to, like, let's say that we price it in terms of Bitcoin. There's like some proposed fork, and then there's some like unchanged Bitcoin, if you will, or something like this, right? And then you could price the other coins in terms of the, unchanged Bitcoin, or it depends on the details of the contract. But it's like basically after that chain split happens, if I sell you a fork future for some fork, and it says at a price of 0.1 Bitcoin or something like this, what that means is you're going to get 10 of like fork coins for 1 Bitcoin or something like this, or vice versa. If we priced it at 10, it would be the other way around. I would give you a 10th of a Bitcoin and you would give me 1 of the other coins. And you can find which one's going to be. What does the market think the price is going to be on one side of the fork or the other? Like how many coins are going to go for each one? And I think that like in the SegWit case, there was like Bitcoin Classic and SegWit Bitcoin.
Yeah, SegWit XT. There's a lot going on.
There was a whole bunch of these different forks.
Yeah.
But, I want to say that there were actually like, okay, one of the contracts actually did activate, and it was like, okay, at the time that this actually happens, I'm going to give you, like 3 of Bitcoin Cash or whatever it was, and you're going to give me 1 Bitcoin or whatever the price was relative to each other back then. And this has happened again and again. Like I want to say in the Bitcoin Cash world, I don't know that much about it, but there was like a whole ABC.
Yeah, the Bitcoin SV. Yeah, Bitcoin SV fork. And I think that did have a more robust like futures around it.
But
again, I wasn't paying attention
me
to it.
neither.
Thank God I wasn't paying attention to it because
there's all kinds of drama there for sure.
I think I would have given up by now.
Yeah. But you can kind of imagine this as one, it's just some way for people to say ahead of some fork, like, no, I want to be entirely on this chain or another, or like maybe I want to, like get rid of all my fork coins, get more Bitcoin or whatever it is. But this can also be like a feedback mechanism where it's like, it's telling you what the market thinks the value of these coins are relative to each other. The exact number doesn't matter so much, right? Because it's like, what if you had a fork of Bitcoin that was like, oh, we're going to double the supply. We're going to have 42 million Bitcoin fork, 42 million fork Bitcoins. So then like the default price should be like 2 to 1.
Yeah.
Or something like that. I mean, maybe there's some subtle difference, but if nobody wants 42 million fork Bitcoin, maybe the price of that goes to near zero relative to 21 million Bitcoin.
So this is really interesting because like when we talk about soft forks and chain splits for Bitcoin, like so much of this is
contingent upon demand in some sense.
It's obscured by, that we don't know. And we have this thing called rough consensus. And there's, a good paper on, I had one of the co-authors, Lynn Alden, on it, and it talked about like the Bitcoin stakeholder groups and kind of as a fork potentially progresses, at the end, you have the most powerful group, but the one which kind of reveals in the market, the last is the market itself, the investors. Totally. And it's really interesting because like we almost don't know for sure what people actually think until we get
the rubber hits the road.
The rubber hits the road, and we can see, the rubber hits the road at a technical sense when the fork happens, but we can see, the relative speed of the tire to the road in the fork future.
Yeah, totally. Right. Or you can see it coming, kind of. There's some expression of market sentiment around these things. I should say that Bitnomial has no plans to launch anything like this, but but this is something that could happen, and I think it is like an interesting discussion. It could be both a nightmarish dystopian thing potentially, or a really good thing potentially, as like a part of the governance mechanism. And there's like lots of different aspects of this that are complicated and interesting.
Say like oil being negative was nightmarish for a lot of people. This is just the nature of markets. Is you have these types of events. I mean, how could you structure a futures fork? It's a very execution dependent. It can go. There's a million variables and conditions which are unique, kind of just to blockchains. Like,
totally.
How do you begin to attack this problem?
Yeah. So I think, first of all, you need to specify in the contract, like the exact type of coin that you're getting in the fork, right? Like very precisely, like what node software needs to be running in order to receive the coins or something. And like github.com/fork Bitcoin/Bitcoin or whatever it is, right? Like that level of granularity.
I think that actually was specified in one of the I remember this now. It was specified like whatever bitcoincore.org, this hard-coded URL points to.
Yes.
It was like exactly like that.
Yeah. Like that is like one side of the fork deliverable. And then the other side is whatever this proposal is, and like it has to be really concrete. Ideally, you wouldn't even list anything over things that have these replay problems, right? Like you're just asking for trouble. I feel like you need to have something that has a clean split, and maybe even there's like some sort of delay. Like you kind of have to wait for some amount of time for things to kind of settle out before the actual deliveries start happening. Because there could be a lot of chaos with a fork, right? Like miners jumping ship and,
Yeah, like Bitcoin, a lot of people maybe forget this because it's lost to memory, but Bitcoin hash rate flipped Bitcoin a couple times post fork. It was a terrifying moment for me, honestly.
And it was somewhat having a feedback loop with the futures markets, right?
Yeah.
Like, where it was like, oh, and there's kind of also the post fork futures as well, right? So it's like, oh, okay, you can talk about after the fork, like the fork has already happened. Here's a deliverable of these coins in terms of the other coins or whatever, right? And you can get these like feedback loops where it's like, oh, the price of that relative to the other one happens to go up for like a little bit. Miners jump ship, and then come back because they're like, nobody cares or whatever, right? Like there's a waffling of opinion, and that's like the problem that you're almost trying to solve with these in some sense. Ideally, you wouldn't have in the contract like these kind of instabilities of feedback loops in some ways. Like you want it to be defined in a way so that it can be clean. If the fork doesn't happen, what happens in the contract? Is it just called off? Do we just like, okay, nothing happens? Is there some sort of payout, but it's like capped or whatever? I don't know. You can imagine all kinds of things that are possible. You might even have all of these running in parallel or something and just like find which ones are the ones that people want to trade even. But yeah. And there has been a lot of stuff like this happening offshore, but not in the US yet.
Yes.
Yeah.
So, okay. So we're, one interesting thing that's happened. I mean, it's happened again, just bigger on Bitcoin now is, we've always had assets on top of Bitcoin.
Yes.
Casey invented ordinals. He opened Pandora's box and a million things flew out.
Runes as well.
Yeah. You've got all sorts of godforsaken token schemes on it.
Side chains and they're like mutual incompatibility or compatibility with possible forks.
Yeah. This is Bitcoin season 2. I covered these things. So like everybody and their dog is launching some kind of, roll up sidechain fork layer 2 meta protocol. And that's fun. But then you also have like Tether telegraphing they're going to issue on Taproot assets. Like Tether would be like the big boys. Now we've got stable coins, in mass on Bitcoin, whether or not like we have significant stablecoin volume on Bitcoin again or not. Sidebar that. Let's just assume like we've got
that's a
assets
whole
on
other discussion.
Yeah. So like, this now affects forks a lot. And it's interesting because I don't know how this plays into the futures market, but I feel like it's got to, and, or maybe those act as like futures proxies. And I'm curious, what are your thoughts about the interaction, maybe the cybernetic loop of assets on Bitcoin and futures?
Yeah. I mean, I want to say that there's also a whole area of like, this has mostly not been happening in the Bitcoin world or even forks of Bitcoin world, but like the Ethereum world and like all these other coins.
Yeah,
they have had
was a big one.
ETH Classic. Yeah, right. Like there have been like using blockchain consensus mechanisms as a like meta protocol for what the underlying protocol should be. There's decentralized exchanges and things like this. And you can totally imagine or atomic swaps, right? And stuff like this, where it's like, you could even imagine structuring like a PSVT type of thing where it's like, you get delivery, but only if the fork actually happens or something like that. Like that could be somewhat expressed natively even. I don't know if that's where you were going with this question, but
yeah, it is. I mean,
of course, there's all the layer 2 stuff as well, but yeah.
Yeah, I mean, I hear there's a very compelling argument. Like I hear a lot of folks, I'll pick on like Shinobi, for example, who says like, we don't want stable on Bitcoin because they distort the stakeholder incentive and they make it really, they make a potential forks like even more contentious.
Yeah.
And I get that. I understand this. So, I'm just kind of trying to like wrap my head around.
All of this stuff puts tons of pressure on all the other stakeholders from the investors, right? It's like the developers are now having direct monetary incentives for there's kind of always a concern about like market manipulation with these sorts of things where it's like, or like maybe another analogy would be like sports betting or something, right? Like if you have too big of a betting market on the outcome of a game, the players now have incentives to throw a match or to make something go one way or another that are perverting the honesty and goodness of the game, right? And this is a real problem. Like, it's like, and you have to balance all these forces where it's like, you want people to be able to express, I only care about this fork and I want to get rid of all these coins that are magically like airdropped to me or whatever. Now the developers or the miners or whoever have direct incentives, monetary incentives to play the game. I mean, there's like,
like I could put the words and I can say it like a developer could intentionally sabotage a particular release or binary of something such that it compiles incorrectly at time of fork. And like you could do really insidious things like that. Maybe like zoom out really big and get really heady and ask you maybe I'm going to challenge you a bit here, which is,
please,
on your, in your conversation with Aaron Casey and Helmoney Pod, you guys talked a lot about free markets and capitalism and the way that markets like signal to themselves, like how we humans should communicate at a monetary level. How do you reconcile that with the absolute chaos of like the potential of fork futures and the weird nuances? Because in this case, it's not like we have a government or a state who is distorting the market with their finger. This is now almost buried in complexity and reflexive feedback loops. Like, this is an open question. I'm trying to like throw a challenge at you and try to, how do you think about this?
I think that this is, this is a thing where I, as like a Bitcoiner, feel challenged myself. I have these like free market ideals, but I do kind of like, as it's like I kind of want things to be as maximally free market as possible, right up until it starts having really bad negative effects, right? Like I don't think that there should be markets on people's death, for example, right? Like, and that there is a role in the government to say, like, hitman contracts are illegal, right? And like, we've been getting a lot of new legislation. And I, to be honest, I'm not an expert on that new legislation, but you could imagine that this is a place where, there are like high level things in the Commodity Exchange Act and all this stuff that says that, like, you can't make markets on people, on killing people or whatever, right? And also if the market is like trivially manipulatable by some party, like, no, you shouldn't be listing that, right? I think it's a very delicate balance that has to be struck between the people freely needing to express themselves with financial products, but then also like not having negative effects on other people that, are wrong. I don't know. It's you get into the question of like, where can people self-organize versus when do you need a kind of a referee to step in and say, no, that's not okay. And it's a complicated question, and the line is not clear. I don't have any of the answers really, but but I think that this is like a thing that will at some point be deliberated in the courts.
It's wild. Like, I don't know how you it's I think it's way more simple to imagine like how free markets look without, like, with much less government involvement. But it's like really, it's kind of terrifying to imagine how like very comparatively free systems like Bitcoin operate when you could, calling back to this like rogue dev, like some kind of compiler binary trick.
Sure.
Like it could like single-handedly wreck a $10 trillion, $100 trillion market. And that's something the market probably doesn't price in.
No.
And there's something the market probably can't, like, I guess that would be a black swan, but that seems like a very big black swan with such asymmetry to it.
And that, like, eventually there probably need to be consequences for somebody if that, like, something like that happened. But like,
Hitman contract. I'm just kidding.
Maybe it's not possible. Like, I don't know. This all also gets into the question of trust. Like, who do you trust to, like, operate these things? And it's like, as this gets bigger and bigger, and the investors, as like a stakeholder class, have more and more demands. Though something interesting is that I feel like a lot of the debate now has been that, like, the developers want to change things. It's flipped from what we've been kind of talking about, where it's like the developers want to change things, and that, like, the investors are like, don't change anything. Like, but that's like a whole other discussion, but you could imagine a thing where it's like, there's this buildup of demand, and then the incentives to throw the match, if you will, or do something really nefarious are, very complicatedly intertwined with the law. I think one, like, escape hatch for a lot of this stuff is that our legal system is generally very flexible, right? And you can have in these contracts things that basically say, like, oh, there's some sort of act of God, or, force majeure, or whatever, right? Yeah. Like, if there's something crazy that happens, like, okay, we have a whole other process for dealing with unexpected things. So it's, I don't know. Sorry, it's like a very muddy answer. But
no, this is great. This is what I wanted. I wanted to, because I don't hear other people like having these types of conversations on podcasts. At least it's all the philosophy and ethics of Bitcoin, which put me to sleep mostly. But
and there's, I think one of the really interesting things is the minor incentives here, right? It's like, because we've seen craziness in the past, and it's like, I think that only will get stronger, But we'll see.
Let's go cross domain. Everybody's talking about quantum these days.
Yeah.
You, Matt, are not just CTO. You've done your tour in physics, which means I think you're probably more qualified to talk about quantum than, like, most people. I've attempted to cover it here. I had Hunter on. We had some good conversations, but the conversations developed a lot since then. It's matured a lot. Smarter people have entered. Dumber people have entered. I guess let's broach the subject. What are your thoughts on quantum?
And then fascinating.
Thoughts on quantum, and then maybe let's kind of weave in, like, the quantum
fork futures question. I think this is a wonderful question. So, okay, I'll start with just my high level opinions about quantum computers. So, I studied physics in school. That was a long time ago, but I know some stuff. I guess my general opinion on quantum computers is that I feel like, I feel conflicted, where there is a real risk there, like all of the quantum theory says this stuff should be possible in theory. No one has provided irrefutable proof that this stuff is not possible. However, it's really complicated. And, there's kind of been this like, oh, it's just 5 years away. For the last 30 years, it's been just 5 years away, right? And it's also like, I don't really see that change. There are still fundamental breakthroughs in quantum error correction, in, just macroscopic entangled states, blah, blah, blah. It's really complicated. And like, I don't feel like the threat is here today, but I feel like there's this precautionary principle that applies where it's like, and there's not just we need to be prepared in case something happens very quickly, which it could. Like, it could be there's like some breakthrough and then it's less than 2 years to a scalable quantum computer. It could happen. I think it's extremely unlikely, but it could happen. But then there's the question of, like, is there a fear of the fear, right? Like, there's like a hyperstitious kind of element to the quantum computer question of, like, you don't know when it would come out. And I think all the game theory would say, like, that they would be very secretive about it and not, like, if you're trying to extract value out of Bitcoin, you wouldn't. I mean, one thing you could do, and this is like a whole question with futures, is put out a massive short position on the Bitcoin futures and then, very dramatically reveal yourself, right? And then make a ton of money in the futures markets. But, with physically delivered coins or futures, you actually have to be able to kind of pony up the coins at some point.
Like a physically delivered quantum futures might not, it would be hard to say that it would work.
Potentially. I mean, it's a whole complicated thing. But anyways, but there's still this fear of Bitcoin, or of a quantum computer, right? It's like, and I actually think that that's by far the biggest risk, right? That there's some sort of spooky event that is not confirming of anything, but is, people get spooked and then run for the hills, right? And it creates a lot of chaos. And so I think having a solution now that's ready to go is prudent, like even if it's not here or not real, or even if the quantum computer is not scalable ultimately or whatever. There was a quantum Bitcoin summit at the Presidio Bitcoin last week.
I watched some of it. It looked like a great conference. Wish I could have been there, but I'm one person. I cannot be in 2 states at once. Okay, yeah.
There you go. No, that was a wonderful pun.
Thank you.
Superpositions, this whole thing. But that was good. But there was a lot of really interesting proposals there, right? Like, there was, kind of this question of, do you steal the coins? Do you let the quantum computer steal the coins, or do you freeze or burn the coins, right? And this is like a very interesting question that has all kinds of dynamics to it. But one thing that I feel like was somewhat absent from some of the talks, I watched on YouTube, whatever, was the question of like fork futures, right? And like there were like a bunch of concrete proposals to have a quantum resistant, algorithm, or like have one of these freeze or like there's this thing Hourglass, which was like, oh, we're only going to allow
like a slow drip, like upgrade transition thing. Yeah,
exactly. A slow drip. There was like the lifeboat thing. There's like a whole thing. I feel like there was a question of how do we activate this stuff, right? Like, how do we decide which one of these is the thing? I mean, you could do polls, you can ask people, directly, but there's always this, like, people don't think about what they put on a multiple choice poll, right? You could imagine a market being a part of the solution for deciding which algorithm is best, or this is where the fork futures potentially come into play.
Yeah.
It's a little bit, and I hesitate to propose this stuff because I think people have a lot of PTSD from the SegWit.
Yeah, and I want to, for the listener,
and it creates a ton of drama.
Yeah, for the listener, like, I know if someone managed to get this far and they're like looking for things to be angry at, I'm like, sorry, man, like, this is just an intellectual discussion, talking about this, imagining what would go, how good this
and I'm not even saying that this should happen. Like, maybe there's plenty of reasons to say that this absolutely should be verboten,
And in that case, come on the podcast and explain it to me. So
yeah.
And so, like, it's really interesting because, maybe a callback to when a reference I made to Lynn Alden, Steve Lee, and Ren's paper on Bitcoin stakeholder groups and how investors, closer to or after fork have the most power. And that's often when we get to see them reveal, like, the market reveal itself, like, that unknown has been really challenging, and it's hamstrung a lot of, I would say, productive discourse, because so much of the discourse is not really about the technical. It's more about the social. And a lot of the social is, well, the market doesn't want this. Well, how do you know the market doesn't want it? How could these let investors indicate maybe early on in the software process what they prefer? Yes.
How can we let people express their opinions with skin in the game, and not just like signal with words that are kind of like anybody can say anything, I don't know. This is like an interesting way to, I also think that discussion is an important part of the process. I help moderate or host the San Francisco Bitcoin developers group, and we have lots of these fun discussions like this. But I also think that it's like, there is if you really believe something, you should put some money behind it potentially, and that will help. I mean, there is also this whole discussion of, like, I don't know if you know Robin Hanson and his whole like futarchy stuff. I'm like very skeptical of this.
I'm a high level familiar. I listened to like 10 minutes of a podcast with him, I think, maybe.
Yeah. I mean, generally speaking, I'm extremely skeptical of this stuff, but there is this whole idea of using futures markets for governance, where it's like you basically just say, like, okay, whatever. I mean, it's basically just voting with your money. I mean, that's the idea. I get like overwhelmed just thinking about this, because it's like I can see that there's like so many bad things about this and so many good things, potentially good things. It's like, I don't know. It's the whole thing.
I actually think that little thought you just expressed right there is probably the best way to end it. Matt, thank you so much for coming on Bitcoin Season 2. I really appreciate this. Where can people find you? And how do people like reach out to you and chat more?
Sure. So Matt Wraith, Bitnomial. I would say that there's bitnomial.com. You can find us there. But if you can also sign up for a beta of our new trading user interface that we're working on at botanical.finance. Botanical like a flower or something. I don't know. Yeah. Botanical.finance. So that's where I guess I would send people.